Good morning. Welcome to Admiral Markets. Thanks for joining us. My name is Chris, and we're going to take a look at this live trading room webinar at the Forex market, of course, primarily, but we can take a look at commodities, stock indices. We'll be using primarily technical analysis and analyzing charts. All right, first of all, be aware that trading for exchange and global financial markets is considered high risk. That's actually this one. And may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Also, please be aware that this webinar and video is shown to a global audience and may not be suitable for everyone as well. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details and information. Alrighty, so we're going to be taking a look primarily at technical analysis. As I said, discretionary is the foremost focus, basically using concepts like trend and momentum to identify what is the flow of price, where is price headed, where can we actually have the most benefit of, in which direction can we trade. Then when we identify a trend or momentum, we can look for pullbacks, for instance. We can look for retracements to the Fibonacci levels, or we can look for patterns, basically to see for a chance to join the trend or momentum. Then we'll be focusing on if there are any filters, anything stopping price from continuing in that direction. Strong support or resistance and confluences have the tendency to do that, all right? That will be the next step. Last but not least, when a chart looks good to trade, I'll be looking for analyzing which levels, which decision zones do I need to price to get to before I'm interested in trading? And if price gets to my decision zone, what kind of trigger am I looking for? What will make me basically take that trade? So for instance, if the euro dollar is at 112 and I analyze the charts and I say 111, I need price to get to 111 or to 114. Then those are my decision zones. I need to wait for price to get to those levels. And once price gets there, what will my trigger be? What would I need to see, for price to make it interesting for me? It could be engulfing twins. It could be a price action, candlestick pattern, for instance, that entices me to take that trade. And what kind of reward to risk do I have once I enter that trade? All right, so let's take a look. First of all, quickly at the Forex calendar, at a economic calendar to see what kind of news events. We had pound news event at 9:30 UK time as always, and the interest rate decision on the Kiwi and some other lighter and medium news. All right. Besides that, of course, you can find a lot of good information on the admiralmarkets.com website. For instance, articles and tutorials. You can go to education. You'll find that. You'll find webinars there. You'll find analytics, fundamental, technical, wave, opinions on the blog. You'll find a market heat map, market sentiment, and the economic calendar I just spoke about. Also, last but not least, please take a look as well at the MT4 Supreme Edition. You just have to go to trading platforms, and you'll see exactly why it's so beneficial for traders. There's a lot of extra features there, 60 plus. So I'm sure that there will be a couple of them that you really love and are very useful for you. All right, with that said, let's head over to the charts. Alrighty, let me change profiles. Apologies, no, I'm at the right profile. I just need to change the template. There we go. All right, yesterday we were looking at price action, right? And looking at candlesticks, patterns. We were looking at candles, momentum and correction primarily. And we didn't have anything on the chart. It was totally blank. And based on that, I took a New Zealand dollar long. And the trade ended up, luckily, for 56 pips. So that was great. That was just purely based on price action, right? We'll take a look at that trade. We could do that right now. Did anyone take that trade with me by any chance, just out of curiosity? Let me know. That'd be great. Hopefully you managed to get a similar result. Now, in today's webinar, we are going to add some few things we're going to add fractals. We're going to add two oscillators. One is showing momentum, that's the bottom one. One is showing moving averages, which is the top one. All right, right here. That's the top one with the green circle, the bottom one with the red circle. Okay? We're going to use these indicators for momentum decisions. All right, and for retracement decisions as well. All right, but we can still look at candlestick patterns and candles. That's going to be the strategy focus of today. We're going to look at the markets with this lens. Edith took the Kiwi, which is the nickname of the New Zealand dollar. Great job, Edith. Very happy about that. Excellent news. So let's take a look at that right now, and then we can analyze the market. Basically, yesterday we were looking at multiple time frames, and we were saying this is an uptrend because look at these bullish candles. We got good daily candles showing good momentum, good daily candles, good daily size candles, closes near the high. 4-hour chart, we see momentum here. We see correction. We see momentum again. We see correction, bull flag. And we saw, more importantly, engulfing twins right there at the end of that correction. If you look at these momentum pieces, right, we see when looking at price action, we see candles that in the majority of the candles are bullish. We see the majority of the candles have a decent size, bullish candles. We see most of the candles close near the high. We see that the bearish candles are small, few, corrective, and that's also actually valid for this part. So we were looking for the pullback within that upside momentum, and we were looking for confirmation of the completion of that correction, which could have been this, right, and turned out to be so. We took the trade based on those engulfing twins. A bit later, actually, because I missed that moment that it was engulfing. It was about 10 pips higher. Could have gotten a bit more out of that if I just would have seen that. But we're in a live webinar. We were looking at a different currency pair. That's the risk if you're showing other things and not monitoring it, close enough because of the analysis. That can happen, though. So we took it a bit higher, and I put the stop loss below the candle low, below this 68.90 level. So the risk was probably about 45 pips, and it was a 56 winner. So it was about 1.221 reward to risk. That's okay, not spectacular, but it's fine. The target was at 69.92 because of the psychological round level of 70, 0.70, and that was a level to reckon with. And at the moment, you see price kind of, it is respecting that a bit. Of course, it doesn't have to mean that the uptrend is over, but we are seeing a bit of a pause at that psychological round resistance level. So, you can look at it two ways. You can take the profit and go for the safe trade, or you can still trail stop it below this strong candle, decent candle. That's a good candle to trail stop, but put it at the 69.65 and lock in 30 pips. That would be the alternative at this point, to move the stop loss below that. If you have not taken profit already, that to trail it below this particular candle, because this is a strong candle. This is a decent sized candle. It's not spectacularly big, but it's a decent size. It has a close near the high. It is showing as well that the close is above the close of the previous candle. It's above the high of the previous candle. There's everything in this formation says continuation, screams of an uptrend. Will it actually continue? We don't know. How about if this 4-hour candle closes bearish like this, and the next one is bearish? Well, then probably there's a good chance we're going to get a bigger retracement. All right, and in that case, probably the trail stop loss will get stopped out. And that's fine, because if it does make a bigger retracement, it's good to catch a bit of profit at least. All right? All right, so let's add these indicators to the mix now. When we look at the Kiwi, we took the trade yesterday here, right? And, well, let's take a look at how these indicators maybe would have helped us, maybe not. Let's take a look. Now, if we're doubting about the trend, I think that the indicators certainly indicate the 4-hour momentum. You clearly see that we got moving average momentum here as price is above, or I should say moving averages here are above, showing momentum to the upside because they're green, right? Clearly with a bullish angle. And if we look at the momentum, so this is uptrend. If we look at the momentum oscillator as well, you can see clearly bullish momentum here, retracement here, and the moment that the momentum kicks in again, right there, right here, you get a great continuation. And that was the same actually for this candle, in fact, right? So just based on that, on the momentum, the entry would have been here, would have been a bit earlier. Now the stop loss would have been wider though, because there's no particular, if we use the wicks here, I'm not sure if we would have survived that. Depending on how tight, 4-hour chart, I would definitely go a bit wider. So could have still been okay as an entry point. If we would have taken the second one, that would be here, because we're waiting for the turn of the oscillator to show momentum, and that trade would be break even right now if you trail stop it, as I just mentioned. All right. So you got a couple of good entries right there, just looking at the 4-hour chart. Looking at the hourly chart, right? If we are looking for scale-ins or trading on a lower time frame, you can see some great momentum moments to scale in as well. For instance, here when you get a good pullback, and here too when you get the continuation right there. And I think that's about the same spot where we took it. So in any case, let's take a look at the euro dollar and see what's going on right now. I was looking for a euro dollar break above these two candle highs. All right, now we didn't get that. Look at that. This candle was below it. 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 Finally, we got it, right? But that's about a day later. So it's still a possible trade to the upside right now, as we just broke with this candle, with the previous candle to the upside. We also see that everything is aligned to the upside. The momentum indicators are showing that we have an uptrend. We see that this is turned back into dark blue. Let's take a look. We see still momentum on the daily. This is all upside. This is upside. So despite the 2 days going sideways, despite 2 days being doji, I think the momentum is still valid. The bullish momentum is still strong. And I think that from that point of view, the continuation still seems pretty likely. So I think that's a good setup from a swing perspective. And the stop loss I would put below the fractal, which is this the circle. I would go a bit below that to 33 probably. All right. Target, let's take a look at targets. I think we can still keep this fib on this candle, the strong daily candle. We should at least hit the minus 272, if not the minus 61.8. All right, so if we aim for the minus 272 target, we're looking at about 45 pips versus a 37 risk, I think. All right, so let me write that down. 45 reward, 37 risk. So it's about a 1-2, let's see, what is it? The 8, 1.2 to 1. Same like the Kiwi yesterday. But I think in this case, I will try to be a bit more aggressive and aim for the minus 61.8 and put it at 114.70. But with the additional rule that I will be trail stopping this 4-hour chart, and as soon as we get a decent sized 4-hour candle like this, I will put the trail stop below these candle lows. And if we get the next one, right, like this, I will definitely move it to break even. And I'm going to take a look probably, I'm not sure how to monitor the 272 target response, because if price gets there and then turns back like this, it might turn into break even. So if I see chance to take profit because I think it's not going to break the 272 target, I might do that. I will be flexible, and I will monitor probably the hourly chart around the minus 272 target and try to see how price responds to that target. If it just pauses briefly and continues, I'm in that trade and I'm still hanging on to a bigger target. If it, however, shows 5 to 6 hourly candles not breaking this target and we're at the end of London, I'm taking profit because I don't think that 272 target will break. And I'd rather than take those 35, 40 pip probably profit or whatever it will be. All right. Does that make sense? I mean, does my trading plan make sense to you? It's in a way similar to the Kiwi, yes, as discussed yesterday. This is the hourly chart, and well, basically, you might be wondering what these fractals are. I didn't talk about those, and the fractals really are, or these diamonds and circles are fractals, first of all right, and I just made a programmer code them for me so that I have a bit more automatic information about them. The green diamonds indicate for me that the direction to trade is up. Dark red diamonds would be that the direction to trade is down, whereas circles indicate support in uptrend, resistance in downtrend. So in this case, we see green diamonds, great, trading to the upside, right? So that's extra confirmation. We see momentum building on the hourly chart here, so I think that that looks good. All right, let's take a look at the pound. Is there anything else going on with the pound? Let's take a look. 4-hour chart has a bit of momentum to the upside. Daily doesn't. 1 hour looks a bit of a mixed picture at the moment, so I don't think that's that interesting. Dollar yen, momentum to the downside. Daily chart, 4-hour chart, momentum to the downside. Hourly retracement. And I'm just looking at this oscillator. You can see that pretty quickly, right? And then 50-minute chart, bit of upside. Now, maybe I'm a bit biased here, but I don't like the position of the dollar yen because it's right at support. So that's one of the filters, right, that is important to look at. That was step 3, look at filters. So we have momentum to the downside on daily 4-hour, right? But we're very close to this support trend line. So I don't want to trade it to the downside. I don't want to trade it to the upside because we got momentum to the downside on the 4-hour chart. So probably what I would rather wait for is a trade to the upside using this support actually. In fact, what would be a good moment to do that? It could be now, right, and just put the stop loss below this bottom. But if we're looking for a bit more confirmation, we would probably rather see the break and close of this candle, this 4-hour candle above last 4 hours candle high, which is at 107.27. A candle, preferably something of a decent size like this, with a close near the high, close above the previous candle high. That would be great. I think that would be a good signal. We'll probably see this lose its dark redness and turn light red, thin red. That would be an extra confirmation. I think that could be a swing trade to the upside. I like that more than trading it to the downside. It's a counter trend trade. I think it makes more sense. Now, what if it doesn't do that? Obviously, if you have a candle that pokes through it but still has a big wick, I'm not taking it. That's not interested. And if it breaks this trend line and then hooks back, yeah, I definitely would be thinking about shorts, excuse me. But we got a bottom here too, so I'm not even that fan of trading it in here, just because of support. All right, that's my 2 cents. Let's take a look at the Aussie. I took an Aussie trade yesterday too, but the Aussie didn't go anywhere. It ended up being break even because price really just didn't go anywhere. It just went sideways. I said yesterday I would be surprised if it didn't go higher. Well, I guess in theory it did go higher a tad, but not the amount I was kind of hoping for. Unfortunately, it's just gone sideways. It's been really just stuck in this range like this and not doing anything. So is the momentum still there? Not really. Look, it's turning thin. It's retracing at this point on the 4-hour. We do have still strong bullish candles dominating, but the retracement is definitely there. Daily is still up. Daily has a still good momentum. The candles are showing that too. But the 4-hour is retracing. So I think it's better to probably wait for the 4-hour retracement to finish. Now, how far could that go? I think that we could probably put a fib on it and see what kind of retracement we could expect. On the hourly chart, I think probably the best fib would be this one at the moment. We see respect for the 23.6 fib indeed. So it could retrace down to the 38 or 50 or 61.8 and bounce there. We could see in that case 4-hour chart kind of build a couple of maybe 1 or 2 or 3 bearish candles, then a bullish candle will arrive probably, and that will be a signal for continuation. I would expect this will continue still lower, and then eventually I think we will see again a dark blue indicating the upside. So a 61.8 level could be nice. You got confluence here like that. All right, so that could be that could be good. All right, we don't have any green diamonds yet on the 4-hour chart, so I think we will get that soon, somewhere in here. Once we do, that's another confirmation that we'll probably get continuation to the upside later on, but I don't think now is the right moment on the Aussie. All right, so we could do this on the 4-hour chart, but I think actually today I wanted to do something different. I wanted to take a look at 50-minute charts. Mind you that there is a pound news event 1 hour, 23 minutes from now, but I wanted to zoom in to lower time frames and do it a bit different. All right, that's our number one task. At this moment, I would like to look at momentum. We need momentum, and it's a bit early to find momentum, so we might not succeed in that. But I would like to find momentum, use that momentum on the 15 chart, and then zoom into 5-minute chart for immediate trading in this session. All right, using these concepts. All right. So the 15-minute chart on the euro dollar is retracing. There's a thin red there. All right, and just because there's thick red or dark blue, right, doesn't mean we're going to trade right away. I still want to make sure I'm not trading against the 1-hour trend, for instance. All right, you see that we do have a downside momentum on this pound, but the hourly is not showing downside. So when it's something like this, that's typically not so good because the 15 could just be a retracement of this hourly. All right, so yeah, the pound would not qualify. The pound would qualify if this starts to become dark blue, and we see the hourly like this. That could be a different story, right? Then there would be alignment. But let's continue. Maybe we'll find something in this early hour. The problem is that it's a bit early, probably, but now we know already from the dollar yen that that is not alignment there between the hourly and 15. Let's take a look at this is retracing, but it is bearish still, thin red, and this is showing red, but it is not closed as candle. So 6 minutes from now, this could be an option. Pound yen. Let me write that down. All right. For the moment, we'll just scan all these charts, and then we'll dive into the 5-minute chart. By the way, if you're more of a swing trader and you like more swing setups, then we can take a look at that later on. Maybe in that case, just let me know which currency pair you think the most interesting swing potential has, and we'll take a look at that after this exercise. 15 is up on the euro yen, but down on the hourly, so that doesn't qualify. Aussie hourly is what? Is down, right? Momentum is down at this point. Or at the end of this hour, it could be, it's turning red. Or it is red already. So 15 is red too. And we're here seeing a retracement. So we'll put the Aussie on for the moment for downside. Kiwi, despite that, the big picture story that Aussie will go up, still valid, right? But from lower. So who knows? There could be some potential here for downside as a counter trend then. Kiwi hourly retracing 15 downside. That does not qualify. Dollar CAD retracing 15 up. Nope. Dollar Swiss. I don't want to do 5-minute trading. I do think is better on the best on pound yen, euro yen. To be honest, pound USD, maybe even a dollar yen or euro dollar, but not that or pound odd, euro odd, but not that great on pairs like euro pound, dollar Swiss, even the Aussie. I don't think it's that great. Pound odd is up and up. All right, so we'll add that. GA. Euro odd hourly is up is up. All right, we'll add that one too. So we got 4 at the moment to consider. All right, so all right. Let's now focus. Let's focus on pound yen first. All right, pound yen is down. Pound odd is up. So that's something to be a bit suspicious about. But we'll analyze them. All right, and see how that's going. So we got a retracement here on the hourly. Right, it's not thick red, which is actually a bit better, but it's thin, so it is showing a retracement of downside. All right, we got red diamonds here indicating that downside is prevalent too. All right, 50-minute chart too. All right, and a recent momentum kicking in. So I think it could be good 3 minutes from now to see how this candle closes. If it's a wick like this, I don't think downside is that appealing anymore. To be honest, I think that makes sense from a price action point of view. But in any case, let's take a look at the 5-minute chart to give an example what makes sense. Let's take a look at yesterday to give you an example of what we're looking for first of all. All right. So hourly is down, you see, thick red. And then 50-minute chart, we're looking for the same thing, thick red. Of course, you could trade it on the 50-minute chart too. In the 50-minute chart, if we're looking for downside, it would be basically this candle right here. When it turns thick red, that would be the entry candle. And you can see you got a good continuation right there. On a 5-minute chart, if we're looking to scalp, all right, we're looking for basically retracement and continuation. So that would be here, right there on this, because this is the moment that 1 hour chart turns. This is the moment that 50-minute chart turns. So at this point, right, we have both the hourly and 15-minute chart showing bearish momentum. Is that clear? That's clear, right? Those green lines indicate higher time frame switches of momentum. All right. So the next step on a 5-minute chart is we're looking for retracement and continuation. So we're looking for retracement. You got it right here. The continuation is when it loses its counter trend momentum. That's this point. So that's the 5-minute entry right there at this line. Okay. And then the stop loss will be above the fractal, about here. Or we could even take the next fractal if, depending on the size, we can go maybe above this one. Both are fine. Both would survive. And then the target could be a pivot point. I think with 5-minute charts, pivot points are the most logical. But you can use, support and resistance as well to try to look for potential exit spots, right? You could perhaps aim for this 155 level. It's a psychological level too. I don't know what we would have chosen yesterday, but the point is you want to look for pivot points. You want to look for support and resistance when making that judgment. All right. And indeed, price making that beautiful fall for almost 100 pips at its very maximum. So that was not the only entry potential. As you see, we see another entry potential here because it thinned and thicked again. We see another one in here and in here and in here actually, and another one here. So there are a ton of potentials with this. I don't think all of them are, one of them is more than enough, maybe max 2, but one is probably more than enough, right? When you get a new entry, it's just a confirmation that everything is going well and price should be continuing sooner or later. All right. Now, in theory, and I haven't done this that often, so I don't want to say that this is a good idea because I need to test it more. But in theory, we could do the same again on the 1-minute chart. If you really like scalping, it could be done, with the same kind of idea. Get momentum here, here, and here, and here, and then look for pullbacks and continuations, right? When momentum is strong. At these particular spots where I have the red circle, or red box, I should say, there's momentum on 1 hour, 15, and 5-minute charts. Let me get rid of this. And let's go to the 1 minute chart. All right, so here, for instance, and here we'll get multiple ones too, so you don't want to take all of them as well. But right here, this is the entry for a scalping trade, stop loss above, the same thing, and you get, a small move down. Mind you, this is a 1 minute chart, so you only get kind of relative smaller moves. Price stays relatively in the same zone. I don't think it's good to take same trades in the same zone, so that doesn't make sense. New setup occurs when the 5 minute chart again turns momentum to the downside. In that case, we're looking for momentum retracement, which is here, right here, and the switch again, which is this candle. So let's put a horizontal line right there, and that's the setup. That's the entry with the stop loss above the fractals, and you get some downside again. All right, next one, retracement and continuation, which is this candle right here, same thing, stop loss, and you get even a better continuation. And the next one would be here. This candle, stop loss here, and you get again a good continuation. Now, mind you, you're only looking at probably 10 pips probably. Oh, this is 35. The last one is a lot for 1 minute chart. This one, I'm not sure. Let's see, that's 50. But these are smaller ones, obviously. This is 9 and maybe also 10. Now, so probably I would say 2 wins seem likely, and these 2 at the very beginning, I don't know, could be break even or maybe a small profit, right? Now, 4 examples is not enough to say that this is a good system on a 1 minute chart or indicates anything necessarily about it. So as I said, I would want to test it more, but this is just to show that the concept of trend pullback continuation, I think can use very widely. And if it's including the 1 minute chart, I really want to test more, but I think it does have potential. So anyhow, does that make sense regarding this pullback on a lower time frame within momentum? Any questions on pullback and continuation? Any questions? Do you have any questions here? Let me know. Now, you could do the same just looking at price action, basically. But it's sometimes a bit more difficult, I would say, on lower time frames. And I think it probably makes it a bit quicker to look at this indicator, in my opinion. But we can certainly do the same with candles as well, using those rules I talked about yesterday and last week, Thursday. All right, so let me give you an example. How about let's take a look at the Aussie. Let's see. All right. So we got momentum, but this is just, let me give you a better example. All right. So we got momentum on the upside here. Good hourly candle. We got the blue here too. So we know it's a counter trend on the hourly, but we do have momentum to the upside. 15, we got momentum to the upside as price is moving up. All right, 5 minute chart. This is not the best example, I think, but 5 minute chart is showing momentum and is showing a retracement right now, but I think that the better retracements were probably here and here. I'm not sure about this one either, because that would be the third setup within a reasonable short time period. So that's maybe not the best example either. Let me check the pound odd. No, that's what's. Oh yeah, pound yen. Sorry, pound yen. But this one is retracing. That's not the best either. So which one is? So let's see which is the best one. Aussie, Euro odd, or pound odd. It's always the Aussie in this case. At this moment, that has the most alignment. But it's an early alignment. I don't think these are the best examples. No, I don't think these are good examples to work with at this moment. But let me say it this way then. At when we look to this upside, right, on the 5 minute chart, I don't think we have very good examples for this morning, unfortunately, live examples. But maybe we can work with an example from yesterday instead. Let's take a look at which pair? Let's take a look at the pound USD. I was saying yesterday I don't like it too much. Remember, I don't find it too interesting. But if you look at the pound USD here, it was in an upside momentum. All right, right here. And if you then look at the 50-minute chart, right, we had another upside momentum from here onwards. All right, so let's put a vertical line there, right here. Let's go to the 5-minute chart. All right, and look at this, where we have, mind you, we have 15 momentum, and 6-minute is up as well. 5-minute is retracing. What point do we get momentum back? Is it this one, or is it this one? All right, I'll move them a bit to the left or to the right. So is it the left one here, or the right one? And we're not talking about this particular level, we're talking about this candle and this candle. Which one is the continuation candle? That's the question for you. Once again, we have hourly is up, 15 is bullish momentum, 5-minute chart, we're seeing a momentum retracement and potential continuation. So is it left or right? That's the question for you. Think about it. Just write an L for left or R for right, and take your time to analyze this. All right. In the meantime, let me tell you that I think this concept is extremely powerful. I think that you could use price action to do that, like we did yesterday. We were using price action to determine trend pullback continuation. I think it's the easiest, the simplest way to trade. And I think we can do it on all time frames, no matter what type of trader we are. So yeah, I think that this is, for me, from my point of view, the best way to trade, and it can be doable for all traders. And the advantage of trading swings or long term is basically that you can trade it with less emotions, I think, right? Because if you're looking at the charts often, you're going to get more emotionally involved. It's going to be more difficult to detach yourself from a trade and make the decision that is best from a trading plan perspective. And you might get caught in revenge trading, over risking, over trading. And overtrading trading many times is not necessarily overtrading. Overtrading occurs when you're emotionally kind of rattled and you have made some losses and you want to get that back. Now, the problem I think that swing traders and long-term traders bump into is the fact you need a lot of discipline to be a long-term trader too. Yes, you don't get emotionally, that involved, but that's also a disadvantage because people then lose a bit of passion for trading because other things come into play. They have, they don't make the time available. So you need a lot of discipline to set aside 20 minutes in the evening to look at your setups and make sure everything's okay. Do the trade management, look for new setups. That takes, even though it's a small amount, actually it takes a lot of discipline because it's easy then to say, 20 minutes, I'll do it tomorrow. As an intraday trader, or if you're have the potential to the possibility because you're self-employed or you have a flexible boss to still trade and during the day somehow, right? It's also difficult. You also need discipline, obviously, but to calm down those emotions, it's not a lack of excitement, probably, but maybe too much excitement in a way, right? So that's the disadvantage. So it's important to find what matches you from this perspective. But no matter what style fits you, this concept will always do you well, in my opinion. So that's why I want to dive into the details. All right, so I'm still waiting for more answers. I would like to get more feedback from you. Is everyone here? Is anyone ready for this? 1 hour is up. Okay, folks, 1 hour is up. 1 hour is up. 15 minutes momentum is up. 5-minute chart is showing right here, once again, up, down. So we're waiting for the continuation. Which is a better continuation, left or right? Left or right? That's your two choices, unfortunately. I don't want to make it political, but that's just how it ended up. Nah, just kidding, folks. We're talking about setup, and there's no right or wrong answer. Don't be shy. Don't be scared of giving the wrong answer. All right? It's just a fun quiz. All right, I'll give you a couple of seconds still for the last answers. All right, the rest are probably shy or multitasking. But yes, the people who said on the right are right. Left is unfortunately incorrect. The reason is because this does not show continuation. Look, neither of these two is showing a continuation or momentum indicator. This is still thin and this is moving down. The first time this turns thick again, which is the momentum continuation signal, is this candle. So that's why this one is the correct answer. All right. Now, from a price action point of view, we might consider this one to be the first signal because it has a close clearly above the fractal, but more importantly, I think close with the strong close near the high, close above the previous candle. That would probably, from a price action point of view, be the first signal we would recognize as let's say, mechanical traders looking at price action. So one candle later, which is not a disaster, but you can see maybe why the oscillator is good to have. I think at least it is. But I know that a lot of people like to only look at price action, and that's fine. I like to mix it a bit. I think that for me, that does provide information that I value, so why not? All right, so that was a pound dollar 5-minute setup right here. And we got a good continuation, right? Beautiful move up for about max 70, 80 pips. Stop loss would have been around 37-ish below, or we could even use this fractal actually, because there's a fractal already, which would have been 20 pipish. So that's a great trade, right? A great example of an upside trade. And so I didn't like this potential. I didn't like this currency pair, but you can see using these oscillators, you can find trades that you might not really catch if you're only looking at kind of a mixture of discretionary things. and that was a good run up. So that's an example of using 1 hour 15 combination for finding small time frame trades. Now, often enough, these trades tend to happen, I would say, more between 10 and 12 Central European time, and or even sometimes even beginning at 9, right? And then when the New York session starts between 14 and 17, right? It's more in the London and New York session. But obviously on the pound yen, you might find one in the Tokyo session. I'm not saying it's possible. I don't trade that session, so. All right, so let's take a look if we can find something else on different time frames. Let's take a look at the pairs we have not looked at and take a look at 4 hour, 1 hour. All right, so 4 hour, 1 hour. 4 hour is retracing but bullish, 1 hour is retracing but bearish. There's not really a good combination there. Four hour is just turned bearish, in fact. 1 hour is retracing. So this could be a retracement within a new downtrend potential. So if this does turn thick red, it could be a short setup on the euro yen. But I don't know. Let's see if we find better ones, because the 4 hour just turned red. So all right, Aussie. We already talked about that one. In fact, dollar CAD. Dollar CAD is retracing on the hourly. We need that to finish. We need this to retrace back up and then turn here for an hourly setup to the downside, because the 4 hour is retracing. Pound out could be ready. 4 hour is downtrend, and hourly is retracing. So as soon as this turns, this could be already a setup, in fact. Right here, let's take a look at this. Daily is down, 4 hour is down. All right, hourly, you can see that we had setups here on this candle, on this candle, on this candle, and in here. All right, and we might be having one right now because we already had a turnaround right here. All right, so this could be actually an interesting potential. Let's take a look if there's any filters to be potentially worried about. Let me get rid of these green lines. We got red diamonds on the 4 hour chart. That's important too. Red diamonds on the hourly. I guess the only thing I don't like about it, just from a discretionary point of view, is that price is going sideways. But I think that the 50-minute chart too, showing the turnaround and kind of breaking this little consolidation like this. Now, I don't like the bigger consolidation in its entirety that we've seen, but it could be as well a sort of descending wedge like that. So yeah, how this consolidation pattern really adds up, I'm not sure. It looks a bit funky, to be honest, the whole price movement. So that's a bit awkward. But looking at these bearish candles in the 4 hour chart, I think that the bears do have control. It's just that price is trying to fight through this level. It's not really managing. But so far, we still have, I think, the momentum on our side when looking at the 4 hour candles as well. So yeah, I think that does make sense to take this as a potential swing trade. It's a risky one just because of the formation in a way. I, it's close to being filtered out, but I think a small risk could make sense with the stop loss just above this fractal at about 83. It's a swing trade on the pound odds, so the stop loss is going to be bigger. It's probably about 60 pips, just below that. And the target is going to be this big 50 fib, which is a daily fib at around 194. Let's put it at 30. There we go. 30, which is 93 pips. Could be a bit lower, maybe. Yeah. Oh, well. You could wait for this hourly candle to close. I mean, we do have a couple of candles already showing bullishness. So from a price action candlestick point of view, that might be better indeed. And you could wait 23 more minutes for that. You might also want to wait after the news event on the pound. But basically what I was looking at is this candle as the trigger candle, for those that are curious, because that's where we had the thinning. That's where we broke this kind of formation as well. And based on that, I think that this is just a pullback for more downside. But if you want to wait for an extra confirmation for kind of a second confirmation here, that does make sense indeed. And that would be a good idea. Or a 50-minute chart here. This candle closing near the low would also make sense, 7 minutes from now. So if you want extra confirmation, I can see that. And that would be the way to do that. To wait for a candle, close at the end of this hour that has a close near the low at least. We'll keep an eye on this. Your odd is not set up. Four-hour chart. No, not at the moment. No, we're looking for, well, what could be on the Euro New Zealand, pound New Zealand specifically is that, or maybe the pound New Zealand specifically, just like the pound odd, we do see momentum on the 4-hour chart, we see momentum on the hourly chart. A bit of retracement now though. So on a 50-minute chart, there could be a continuation as well. If this turns again here on the oscillator like this, then this could be a turnaround as well within that downtrend. So that could be, but it's the same as the pound odd, so I don't think that it adds a lot of value, but it could be maybe better than the pound odd. But here too, a bit of strange formation, but in any case, it could be a continuation. We are in, as you can see, on this 50-minute world, broke this trend line already, heading south, heading lower with lower lows and lower highs. And this could be a retracement within that downtrend. Just like we had, for instance, here. I said it, when this turned back down. All right, so that would be a potential setup on the pound New Zealand, but it's also very similar to pound odd. So, and yeah, but you can see similar example how it worked out nicely. You got a good continuation and falling some almost 100 pips, so that's great. Now, using this, I think, idea of trend pullback continuation, in my opinion, is important because there are some traders, there are some analysts that don't think that, believe in the theory that price is making a kind of a random movement, right? And it's impossible for technical analysis, anyone, to make judgments about that are profitable. So the whole trend concept is important as a counter argument because those that subscribe to technical analysis like we do and understand that it's all about the emotions that drive price in extremes. And it's those extremes that gives individual traders, it's the market emotions, right, that gives us the ability to potentially profit from that. Now we just have to make sure that we don't get, or we can manage our emotions so that we can make good judgments about that. That's our task. But because of that, that's why the momentum and trends and emotions that allows us, I think, in my opinion, to capitalize, to make profits from opportunities like that. And that's why I don't think we see that price is moving at a totally random path. Right? I obviously don't agree with this this thought, this theory, and I think it's in my opinion, it's, I don't want to use nasty words, but it doesn't make sense, right? Because obviously we all see that the market is moving in emotions, in waves. Even if you don't like wave analysis, even if you don't use wave analysis, we all see that the market is responding emotionally in ups and downs, at least in certain instruments. Maybe not at all. Maybe not if you look at, if you look at the Euro Swissy at the time, it was going flat, right? But that's because there was an intervention. So those are, of course, different situations. All right, so let's see. Well, 17 minutes before this candle is finished. I don't think there are, fortunately, a lot of examples from this, but that sometimes happens. Of course, if you're looking at the 4-hour, 1-hour charts, that will be a bit slower, and there might not be several at the same time. There could be only one. Like in this case, it's only the pound odd at the moment. But throughout the day, I'm sure there are going to be some things that line up on the hourly and 15-minute chart. One of those, I think, could be the euro dollar, perhaps. If the euro dollar, for instance, here, it's already showing actually a bit, right? 15 is showing already blue. 1 hour is blue. So this 5-minute chart could be ready as soon as this finishes retracement, turns back up. 5-minute chart could be ready for upside, I think, on the euro dollar, on a 5-minute chart, for instance. So that's already lining itself up. The euro dollar intraday, I think, for upside. That could be one that has that, right? Which else could have that? I think the euro yen could. If this starts to turn thick red, right, then there could be a 15-minute world setup as well. If 4-hour, 1-hour are momentum, 15, we need a retracement of 15, and we have potential there. All right, but we got to be careful. That's contradictory to euro dollar upside, so that's something to be cautious of. What else could make sense today? Maybe the Kiwi. The Kiwi it's upside 4-hour, 1-hour is retracing though. All right, how far can this Kiwi push up? That's a good question. The answer to that question could lie in a tool I use, which is a Fibonacci target tool. Right here. And I look at the levels. So this is the base level. Pink is base. This is 1, 2, 3, 4. So price still has space up to the 5th. So it could make one more push up. In fact, we see respect at the 3rd. A bounce already at the 4. So we might continue with this momentum. I think that looking at this, it looks pretty decent. So from that perspective, This could be a 15-minute setup right here, in fact. Now the hourly is not trending, but there is an upside. 4-hour is momentum. And this could have been a correction, as I said, from that 70 level. This could be a correction for more upside. So that could be a potential right here. I'm just thinking which way would be the best to tackle that, because the hourly is not showing momentum at this moment. So maybe better would be to wait for the 15-minute chart to show dark blue, then zoom into the 5, wait for the 5 to retrace and pull back and continue. That could be the best way, I think. That way we got 4-hour momentum on our side, we got 15 momentum on our side. 1 hour is not momentum, but it is an uptrend. And then on a 5-minute chart, we would have the pullback continuation. All right, pound odds, 13 minutes left. If it closes something like that, then that does look like a good close, because the close would be below the candle low of the previous one. But let's see. Still too early to say. Pound New Zealand looks to be doing the same. Right, 4-hour, 1 hour momentum, 15-minute chart is showing a counter trend. In fact, this could be an entry candle, as this is thinning. It actually is moving so fast at this moment that sometimes it happens that the entry is a bit late. In this case, that would be so. But I don't know if it's necessarily late, because if it's such a strong momentum candle, the chances of follow through are also very high. Obviously, it would have been a bit better if it would have been about here, so we didn't have such a big stop loss. But let's see how this closes. Gold. Let's take a look. Gold. A lot of trend lines here. Let me refresh this. All right, monthly has bullish momentum. Weekly is retracing. Daily, bullish momentum back. 4-hour bullish momentum. 1 hour bullish momentum. 15 bullish momentum. 5 bullish momentum. There's momentum to the upside on all time frames on this one. So we need a retracement, which means probably it would be good to have the one that doesn't have. Sorry, all time frames have momentum, so I guess we need a retracement of the 5-minute chart. We had one already. We had a couple already, right? We got here a retracement. We had a couple of entries already. So let's see how far this can push. Let's take a look at the targets. All right, I might have to do that on an hourly chart. I'm not sure if this tool works that well for gold, actually. No, it really doesn't work too well. Unfortunately, it's more for currency pairs. All right, doesn't matter. Let's take a look at other targets in that case. Well, anyhow, I guess what I would like to see on a 5-minute chart is the move back to red, at least. I don't think these smaller retracements, there are two types of retracements, right? We got this lighter retracements and the ones where price really goes back into the opposite direction. So the ones with the green circle are deeper retracements, and the one with red circles are lighter retracements. I would like a deep retracement, because we already had lighter retracements here and here. So I think, and even now, but as I said, I don't think, you don't want to take too many trades in the same directions that are part of the same swing high, swing low. This is still part of the same swing high, swing low. Scaling in the third time always becomes risky. This is a third scale in. It could work, but it's risky, and I don't think it's good. I think it's better to wait again for a deeper retracement like we had here, where it goes back to the zero line. Considering the momentum we see on all these time frames, that should be a good continuation. The target, if we put a fib on this very impulsive part, for the moment is 1259. From a larger time perspective, it could be even 1272. From a swing perspective, from a long-term perspective, it could be even more. Because we're still trading towards, on a daily, we're still trading towards the green diamonds here, so that's indicating uptrend. So that could indicate a potential to move finally up to 1350, actually. Right? This could be the retracement that is starting the rally up to 1350, because here, depending on how we fib this, but it could be a 38.2 fib. It was very close to hitting a 38.2 fib. So the target that's still open is the 272 target at 1350. So we got 12, what did I say? 1280, I think I said, right, on lower time frames. Then I'm not sure anymore. Lower time frame targets here, and then we got bigger target here. Using this fib on this daily chart, 1255, some level to be reckoned with. After that, 1268. So we might go up to 1255, make a retracement, and then move up again. Yes, I do think so at this moment, yes. But I do want to warn that this is based on this oscillator, right? So what I do want to warn is that as long as the hourly momentum stays, it's good for 15-minute traces. But as soon as we lose the hourly momentum, I'm sticking to the hourly chart and not zooming into the 15. So anyone who is interested in testing this indicator, just write me an email. Now, if you don't want to use this indicator, in that case, let me tell you what I would do. In that case, I would like to see 1 hour candles, basically strong candles. As soon as an hourly candle is showing some hesitation, like a doji like this, I wouldn't be looking for 15 retracements anymore, or 5. As long as the hourly candles look good, I think we can look for 5-minute dips back to the zero line here. I would say 5 minutes. If 15 minutes goes back that far, the hourly probably lost momentum. Because mind you, we're getting close to 1255 target. So I think at this moment we kind of have a small piece left, but then we're going to probably see a bit bigger retracement. That retracement will probably happen on the hourly, and we'll have to wait for the hourly to continue, I think, for the next target to 1268. Does that make sense, Sandio? So probably waiting for the hourly retracement at this point, unless you're really a short-term trader, and we do get the pullback and continuation up to that target, probably a bit better. Just because the target at this moment, the intra target is so close. But looking at this momentum on hourly, 4 hour, and daily, I think that it's a very good chance we'll see this and that. All right, great. All right, let me just give you one more example of how we can use this oscillator and time frames and candles. All right, so let's take a look at a swing example, and then we'll take a look at how the pound dollar closed at the top of the hour. Got a couple of minutes left, so well, let's take a look at which one? Maybe, well, why not? Maybe this Euro New Zealand. Let's see. All right, this is when the daily switched down for momentum. This is the 4 hour, or it could be that, yeah, indeed. All right, that's the daily momentum down, 4 hour momentum down. So what we're looking for is an hour retracement and continuation, which we had on this candle. Let me show you. Let me take off these green lines because we know that the momentum is down, right? This one, okay. And let me show you that our continuation candle would have been here. Right there, this blue one. So that would have been the entry, an hourly swing setup based on the daily 4 hour momentum. Stop loss would go above this fractal like this. We're looking then at roughly a stop loss of about 75 pips. And the target size is discretionary, so that's always a bit difficult. But I mean, you can see that in one shot, the price moved about 200 pips. So there's plenty of profit potential there. Let's take a look at this candle specifically to see why that's the entry. Once again, just to make double clear, we got retracement here, and then we got a thick red again. If price would have gone back into the blue, we would be looking for the thinning right here instead of the red, right? We would be looking for thinning, in this case for a downside. We didn't get into the blue, we stayed in the red, so we're looking for a thick red. We got the thick red right there. Now, if you look at price action perspective, so let me take away this blue line. Good candle, strong candle for an hourly chart at least, sizable candle in any words, in any way. We got a candle close near the low. We have a candle close below the low of the previous candle, below the close of the previous candle. We have a close that's actually below the fractal as well. You see that close below the fractal? An extra reason why it's a good candle. So all of that looks like good price action. You also have a continuation within 5 to 6 candles. Look, 1, 2, 3, 4, fifth candle. All right, we got also a red fractal as extra confirmation there, indicating the downside. A blue circle too, a circle indicating, the downtrend on this time frame. So that's great. And you got a lot of profit potential. So that's a great trade. You got the MA oscillator too. Look at that. Both are red, below zero line, bearish angle as an extra confirmation. That's a swing trade potential right there. Eventually we lose the momentum on the 4 hour chart though. We regain it here. So the next swing setup on the hourly would be here and here, those two, with the stop loss below this one, above this one, and going for about 120 pips. And we got a good move down, all right? Now you might say, hey Chris, how about here? Is this a setup? Right here. And or here. No, yeah, here. Sorry. All right, these two. All right. Now that depends. The answer is it depends what the 4 hour is showing. If the 4 hour is the momentum, they would be. But if the 4 hour is not a momentum, it isn't. All right. And the 4 hour is not a momentum. Look, it's retracing. What we basically want to make sure is that whatever setup we have, the one time frame higher does have momentum. Otherwise, it's dangerous. 4 hour lost momentum in this case, so these are not 1 hour setups. It's best to have momentum on a time frame higher. Now the daily did have it, so we might, from a discretionary point of view, we might think about it, but it's best if the 4 hour has it too. If the one time frame higher has it. Anyhow, we reached the moment where we have pound odd. So good candle, I think. Bit of wick, but let's measure it. The low 69, the high 51. Difference is 82 pips. The close is 22. That's about a quarter, which is okay-ish. It's not fantastic. It's okay. Anything between 20 and 30 is okay. Between 10 and 20% is great. Is good. Lower than 10 is great. Lower than 5 is excellent. So anything between 0 and 20 is fine. Between 20 and 30, it's okay. Depending on circumstances, it's a bit of discretionary, but it's okay-ish. So it's okay-ish. As a breakout candle, I think it's okay. We do have a close that obviously closed below the previous candle low and close. We have a close that didn't really break through our purple line. It would have been nice if it closed below it. That would have been perfect. So it's not perfect, but it's okay, I guess. Maybe if you're not in that trade like me, waiting for a retracement to the same level I took it, could be better. I don't know. It's, of course, always your judgment, but it is 20 pips by higher than now. 195.24 is where I entered. 195.24. So your dollar, let's take a look at that doing on the hourly chart, is retracing, and it's showing lots of momentum on this hourly. In fact, 4-hour chart still has momentum. Hourly is losing it a bit with this price action. You see why? 15 is losing it. So no setup on the 5-minute anymore. 15 doesn't have momentum, so no 5-minute setup. And as soon as this momentum is lost on the 4-hour chart, or in other words, if this 4-hour candle closes something like this, I'll probably exit and take a small loss. Or if the candle closes even worse, of course, if it closes lower like this, I'm out of that trade with a market exit. This candle probably has to close bullish for me to stay in that trade. If it doesn't, then I think it's showing weakness, and I don't want to stay in that. Now, it still could go up after that, don't get me wrong, and I might re-enter it after that, but I don't think it's worth the risk to stay in that trade. So we still have some time left. This 4-hour candle is not closed, and this could just be a sideways volatility before we do move up. But before I trade it on a 5-minute chart, I would like to see at least 15 momentum back on the chart. All right, so that wraps it up. If you're interested in, I don't know where it is. Let's see. Not sure where it is. But anyhow, interested in the indicator, just let me know. If you are interested in more webinars, then I hope you'll join Nenet's Strategies of Swing Trading. And our Thursday webinar on Price Action Strategies Part 2. Like we discussed last week was Part 1. Yesterday we looked purely at price action. Today I wanted to show basically price action 2, but in combination with an indicator and how those two correlate. So hope that you will join those webinars. Oh, I forgot about the Kiwi, by the way. Let's see. Yeah, waiting for 15-minute momentum. Let's see when that arrives. Anyhow, back to those webinars. So hope to see you in those two webinars, Wednesday, Thursday. Next week we get the same schedule again, of course. As always, Monday, Tuesday, Wednesday, and Thursday. Wish you all great trading, and talk to you soon. Cheers.